All right, so you know how everyone's always talking about the future of finance and how crypto is going to totally disrupt everything. Well, there's something happening right now under the radar that's pretty fascinating and could have a real impact on how you manage your money, especially if you're using a credit union.
Interesting.
We've been looking into this article by Fank Maza Metallicus called The Quiet Shift: What Credit Unions Must Know About Deposits Moving to Crypto Platforms. And it's got us thinking.
Yeah.
So we wanted to do a little deep dive into it together, really break it down and see what it means, for the average person. What do you think?
Let's do it. The title itself, The Quiet Shift. I mean, that kind of sets the stage, doesn't it? It's not this loud, disruptive event, but rather this subtle, gradual movement of funds. And it's happening right under our noses.
It is. And the crazy thing is, when you start looking at the numbers, it's like, whoa, okay, this is actually a pretty big deal. I mean, Robinhood, for example, they reported something like over $50 billion in net deposits just last year in 2023. And a lot of that is linked to people wanting access to crypto and other financial tools. Coinbase, too. Their assets under custody more than doubled, year over year, reaching over $330 billion by early this year.
Yeah, you can't ignore those kinds of figures.
No, you can't. And even PayPal and Venmo, those apps everyone uses to send money to friends?
Yeah.
Their users are holding nearly $3 billion in crypto combined. That's huge growth compared to the previous year. Over 200%, I think. So it's like, where's all this money coming from? And why are people moving it to these platforms? What do you think?
Well, the article points to a few things. One is definitely convenience. Like you were saying, these platforms offer a one-stop shop for a bunch of different financial needs. You can do your banking, you can invest in stocks, you can buy crypto, all in one place. It's just super easy.
Super easy.
And I think another big factor is the idea of having options. People like the flexibility of being able to explore different asset classes, diversify their portfolios without having to jump between a million different apps and accounts.
Mm-hmm. Right. And especially for younger generations, like Gen Z, crypto seems to be a much bigger part of their financial picture. You know that security.org report that came out this year?
Yeah, I saw that one.
Almost 30% of U.S. adults now own cryptocurrency, which is already a pretty significant number.
Yeah.
But when you look specifically at Gen Z investors, it's way higher, almost 42%, compared to only about 11% who have retirement accounts. So, what do you make of that? It's pretty interesting to see how they're approaching things differently.
Well, it definitely suggests a shift in priorities, right?
Sure.
Maybe they're not as focused on traditional long-term investments like older generations, or maybe they just feel more comfortable with digital assets, having grown up with technology their whole lives. Crypto is part of their world in a way that it wasn't for older folks.
Absolutely. And you've got all the online communities and influencers talking about it too. So if this trend keeps going, what does it mean for traditional institutions like credit unions? Because, credit unions are all about building those long-term relationships with their members.
Yeah, exactly. And that's where the challenge comes in, because if people are gradually shifting their money to these other platforms that offer crypto and a wider range of services, well, they might not need their credit union as much anymore.
Right. They might not see it as their central financial hub in the same way.
Exactly. The article actually calls it a slow weakening of the primary financial relationship. It's not like people are suddenly going to empty their accounts and disappear, but it's more of a gradual decline in engagement.
Makes sense. But the article does point out that credit unions have one major advantage. They've already built that trust with their members. So how can they leverage that trust in this new environment? How can they adapt?
Well, that's the million-dollar question, right? And the article suggests that they don't necessarily need to go all in on becoming crypto exchanges. That might not be the right approach for every credit union, but they do need to find ways to integrate digital asset offerings into their ecosystem, maybe through partnerships or by providing educational resources to their members.
Yeah, make it easy for people to understand and explore those options. Because at the end of the day, they need to be able to meet the evolving needs of their members.
Right. They have to stay relevant.
Exactly. If they don't, they risk getting left behind as this quiet shift continues to unfold. So for everyone listening, think about your own financial life. Where do you keep your money? What platforms are you using? And do you feel like your primary financial institution is keeping up with the times, offering you the flexibility and options that you're looking for? It's a good time to assess, see if things are aligned with your needs and your expectations, because the future of finance is being shaped right now, and you're a part of it.
Absolutely.
All right, that's it for this deep dive. We'll catch you next time.
See you later.